Hello and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, as well as our co-host, Skyline Corporate Communications Group, we're very pleased you've joined us for our next live presentation from OptimumBank Holdings, a South Florida community bank. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Moshe Gubin, Chairman of the Board, Elliot Nunez, Chief Financial Officer, and Seth Dennison, Managing Director of Investor and Corporate Relations of OptimumBank Holdings, which trades on the Nasdaq under the symbol OPHC. Welcome, Moshe.
Yeah, thanks, Bob. Appreciate it. And thank you, everybody, for joining us today. This is going to be hopefully the first of many presentations to the public as we're working to increase investor awareness of our company and our brand. We'll start the presentation. Our company, which we're going to talk about today, is a bank, like Bob mentioned, a South Florida bank that's traded on the Nasdaq. It's managed today. Today, I'm the chairman of the board, as I've been for the last 12, 13 years. Our bank president is Tim Terry. Our CFO is Elliot Nunez, and our chief credit officer is Melissa Zurich. All of our management of our bank have been long-term community bankers, and we're so happy that our team is running as well as they are together, and hopefully for many more years to come. Our company, it's to understand where we are today. Really, we have to understand where our bank started and how things have evolved. The bank started long before I invested in the year 2000, where they started our first branch in Plantation. And in 2004, they grew the branches to be 3 branches, one in Fort Lauderdale, continued the original branch in Plantation, and opened up a branch in Deerfield. In 2004, the bank changed their name. Originally, this bank was created as an internet bank. They pretty much were ahead of the times. The guys that started the bank were people that had sold previous banks and built up banks. And really, a special mention to Al Finch, who was really the founder of the bank years ago. In 2006, we began trading on the Nasdaq and saw a lot of success. This bank had originally started with about a $5 million equity, and at some point had gotten up to about $55-60 million of equity. And we're running really, really strong. And then you see this gap in our story from 2006 to 2020. And that's really where the story changes. So 2007, 2008, financial crisis in Florida caused a lot of banks to go out of business and a lot of banks to have troubled assets. And really the whole economy, as you know, changed drastically. Our bank was probably meant to go out of business at some point. And lo and behold, when the chairman was switched from the original founder, Al Finch, to a guy named Sam Boric, who became the chairman, they started looking for new people to become involved with the bank. They found me, and in 2008, 2009, I decided to join the company. And when I joined the company, as a board member at the time, I was doing it for really, I had a childhood dream to be part of banking and really always wanted to be a banker in some regard. But I was really doing it for other reasons, because of my other company that I wanted to take public, which we just did recently on the New York Stock Exchange. This company, but once I joined, we don't believe in losing. We believe in winning. And this bank was struggling and needed a recapitalization to save it. And I went out and started fundraising, and we brought in the money. My partner and I invested a large sum of money, and all the people that invested with us, they kept asking me, Moshe, are you going to look out for our investment? And my answer to them is, of course, I'm going to look out for your investment the way I look out for my own investment. And after that, I started visiting the bank for a week, a month, where I've been doing that until this past year for basically 12 years, coming here and basically taking the company and fundamentally looking out for the financial metrics to clean up a company with struggling assets and a balance sheet that was weak, to turn it around, increase profitability, And so basically that's the story. We started in 2010. I got anointed as the chairman of the board. I'm grateful and appreciative of the folks that support me and want me to keep doing that. And I'll continue to do it until someone decides that I'm not the right guy anymore. But we basically at the time had a company that was losing $250,000 a month at the time, and me as a fundamental investor in things looks for, how do we stop the cash burn and how do we turn around the trends. You fast forward to, let's say 2013 or so. We basically replaced management. We replaced a whole lot of the employees that were here. We built out a model of how we're going to run a bank as if I was the customer, and came along and put in deposits, and we weren't set up yet to really take care of the customer. And when we realized that, it became a whole objective for us to say, okay, we got to be white glove service, take care of the people, and treat them all as if they're wealth management customers. And that's what we did. We built out our whole cash management treasury team. We built out how our lending platform was and how we take care of our borrowers. We started working on all the different metrics that have to do with what the interface with the customers and how that goes. And we built up a whole family of shareholders, depositors, borrowers that are today our family. And in that period of time, from 2010 through 2019, we had been under a consent order, which basically limited what lines of business we could be in, the size of our balance sheet, what we're allowed to do, and the like. And then comes along 2019, where we get released off of the consent order, and that's when, by then, we had a solid management team. We have a solid board of directors that today work real well with management. We got along great, and the staff that's been hired here and that continue, and they're all shareholders, by the way. Every single employee here, for the most part, are shareholders here, and I'm proud to say that. And in fact, I'm even more proud to say that our bank president has a sizable investment here, and all of our board members are all shareholders. I'm probably the largest shareholder today. But nevertheless, once the consent order was lifted and we were able to, face it and fight hard to get to where we want to be, you'll see in a future slide of how our growth went from there. So in 2020, we celebrated 20 years. 2021, we got to 335 million in assets, and I believe 2020 or 2019, we were at like 100 million of assets. And in 2022, we got over 585 million in assets, and in 2023, hopefully we what's missing on the slide is we closed the Plantation branch. We made a good win on the real estate with the intention of opening up a replacement branch in North Miami Beach, which, God willing, is going to open in the next quarter. If not the next quarter, then the quarter after. And we're also working on a fourth branch. Just a quick overview of our company as of the end of the first quarter. Today we're at 622 million of total assets. Our loan to deposit ratio is a little bit north of 95%, and our loan portfolio has broken $500 million. Like I said just now, we have two locations that are open, third location opening, fourth location expected to happen downtown Miami. Our stock is listed on the Nasdaq under the symbol OPHC. Really, as I said in my chairman comments at our annual shareholder meeting, we've done a real good job in our company fundamentally bringing profits and ROE, like we'll see in the slides coming up. One thing we haven't done well is managing the stock. I apologize to the shareholders, and now we're aggressively going to work towards increasing the stock price. As you can see, the stock price of tangible book is not a good number, and really our stock price should increase drastically, and we're going to work towards doing that. Part of that is with education to the public and the marketplace, increased liquidity, and these are the things we're working on. We feel that we're in the best place. We're in Florida. We have community banking, which is an important part of the world economy and how people do business. And we have a good business here. We don't spend any money in marketing. We have customers lining up day and night to become borrowers and depositors. The Florida market, this slide you folks could read on your own, but everyone knows Florida has been a strong place for business. Not to be political here, but the job growth has been great. The real estate market's been amazing. population, people are flocking here. So as they come here, there's more needs for places to live and businesses to happen, more customers to take care of, and we have a strong economy here in Florida. And we feel that our bank, with our core market, our core borrowers are Florida loans, mainly CRE borrowers, commercial real estate. We support our customers in any way. So if they're somewhere else, so a portion of our portfolio is outside of Florida, but most of our business is in Florida. Our customer base for deposits is not necessarily Florida driven, though most of our borrowers have deposit accounts here, but we have deposit accounts, account holders from people all over the country, and in fact all over the world, because we do not require in person people to be in person for them to open up a bank account. This is our history over the last 5 years. You could see the growth in employee size from 19 to 52 over 5 years. The non-interest expense also staying in line, and total asset growth, all very strong growth rates. Our NIM, interesting to note, has been relatively flat, and that's based off of a fundamental. I'm using that word a lot here because our total business is based off of fundamentals, but reality is that we took an approach of we take care of our customer, and when it came to the crazy marketplace on interest rates, we took the approach of we're going to hold firm on our pricing, and relationship wise with all of our borrowers that needed loans with the higher interest rate, we've apologized and we've maybe made a little bit of a concession, but for the most part we're holding firm on our pricing, and that's reflective in our NIM today. Pre-tax, pre-provisional core, you see what we're doing here. We're on a run rate today of over $13 million of true core profitability. You could see our franchise footprint in the left corner of the slide. First branch in Deerfield, Fort Lauderdale in 04, Plantation branch closed in 21. And then, of course, how proud we are that we ended 22 with $585 million in assets. We're really on a march towards $1 billion in assets. We feel like that's a number that puts us on a certain stage in the world, whether it be with investors, whether it be with other folks that and I don't think efficiency is going to matter. If you look at our efficiency is better than most, right around 50% or a little bit below 50%, which is a great number. But still, we want to work towards $1 billion in assets, so we could say we're $1 billion bank. Part of that is going to require us to raise about $30 million in equity. We'll talk about that a little bit later. Even though I know time is ticking and we're going to run out of time, but we're going to get to it. Our lending gross loans, as you could see the growth, almost a 45% growth rate over 5 years, pretty strong. Our deposits, same story, really, really strong, 47% growth rate. And our fee income is also growing. We took on a good bunch of piece of business where a lot of transactional stuff. We built out our back end of how we process and how we take care of the customer. And because of that, the customer base that we have today, different than, let's say, it was 15 years ago or even 10 years ago. There's the amount of transactions and volume of wires, ACHs, and other services, and we're below everybody else. We're not charging even market. We're below market, and we take care of our customer, but it's growing real, real well. And that shows, and that's why our deposits have grown as well as they've grown. You see our lending. We're concentrated in commercial real estate. I mean, that's how it goes here in South Florida. It's most of the business is real estate. We just recently began doing SBA lending, which is going to help us. It'll help dilute the amount of. It's not going to change the percentage of CRE versus asset size, but it'll dilute what this pie graph showing what our loans are to kind of add in a bunch of C&I. Same thing with deposits. Our cost of deposits today total is 2.7, and that's a mix between non-interest bearing and interest bearing. And again, this is the marketplace. So our holding firm on our spread on our lending continues our NIM to be positive. So we're okay with that. What I just was talking about here is the core deposits. Like we said, we have 527 million of total deposits. Out of that, 160 million about is non-interest bearing. Everything else is of course interest bearing. Our key to success. Oops. Credit trends. Proud to say we haven't had a bad loan in many, many years. In fact, we pride ourselves on our relationships we have with our customers, both in the deposit side and on the lending side. Whenever we have issues, and we've had issues, but phone call, little effort, and we've gotten paid off, and we've had no real losses. Interesting thing to note is when you look at our financial statements, there is a bad debt expense that sits there, and that's because of accounting. I'm a CPA. I can tell you this is one accounting rule that's a little bit off. We have a consumer lending part of our portfolio, probably sits around $30-40 million. That's priced out to have a bad debt built into it to still net us out to a 8% actual yield, and we actually beat that for many years. Now it's around there, a little bit less, but the actual accounting for the bad debt on those consumer loans have to show up on their bad debt expense. So it shows that we have bad debt, but in reality, that's built into the program that we have, and so it's really a real bad debt number is zero. If you look at what we have here, our reserves, we're at a 1.26 when the national average is 0.97. So we're over reserved. To give you any idea, our financial statements, how solid as they are, they're still presented relatively conservative. And as far as non-performing assets, we have zero. We've had zero for 3 years running. And the national average has a little bit over 0.25%. The kind of loans that we're doing, like I said, is mainly CRE, commercial real estate. Right behind that is multifamily, and a little bit of residential. We'll take care of our customer. We will not originate a residential loan, so we don't have any of the exposure to the HMDA or any other requirements. Where if you do it wrong, since we're not doing that full time, we don't want to really be exposed to that risk. So what we do is we have somebody else generate the loans, and then we buy it and we underwrite the deal from the beginning before the loan is ever processed. And then we close the loan. And like I said already, we talked about the consumer loans, which right now is about 40 million, so it's 39 million or so. Loan growth, again, been strong, really, really strong. And today we have a strong, robust pipeline. It continues to be strong. Our customers, literally, we don't spend any money on marketing. Like I said before, they love us. It's all family kind of environment. We take care of our people. Middle of the night, they could call me. I'm the one CEO and chairman of a company that my cell phone number is on my business card. I task you with finding other people as busy as I am that have it on the business card. That being said, this next slide is really, what happened in the first quarter to the marketplace was crazy, but we're strong by dumb luck or by some kind of wisdom, accidental wisdom. We're sitting with $112 million of available liquidity today, which is 21% liquid assets. We were lucky enough that one of our near and dear customers of ours called us last year and asked us for an insurance program because they had $10 million sitting in another bank, and they love our bank so much they wanted to move the money to us. And I'm like, I didn't know what they were talking about. And they said, well, let me just tell you, we pay for it ourselves, and here's the information. So lucky for us, we got insurance at the bank last December. And when all this was going on, if a customer wanted insurance all along, we insured over $250 unlimited, and we pay for it. We don't charge it to the customer. The customer, if they want that security, that blanket they feel that they need, they don't need it. We're super strong. There's absolutely nothing to worry about here. But if they wanted it, they can elect to have the insurance. Doesn't cost them a damn thing, and we're glad to do it for them. Continuing with our liquidity, today we have a total availability of close to $170 million. This is as of the end of the first quarter. I think right now we're right around the same number, actually. 236 million of contingent funding sources, including we have the ability to get CDs online. Our other comprehensive income, which a lot of people are talking about, where the held to maturity number, our total held to maturity number is less than $500,000, which is de minimis if it's even that much. And then our deposit portfolio quality, when this whole thing happened, people flocked to us. They called me directly. They called bank president directly, and we literally had no runoff. And in fact, people came to us and I mean, our main competitor is a Signature Bank to begin with. So the minute something happened, people were coming to me, we got to move our money to you. And I'm like, gladly, I'll take it any day of the week. They know that they could find me. They know that I'm accessible, and they know that I'm going to take care of them because that's what we do. And that's what our business is based on. Our growth forward strategy, we're going to continue to execute on our strategic plan, which we've done real well. We built out the whole lending area, and we're still continuing to work on our technology to make it. Right now, we have average technology, but it's such a process to change the technology to improve it, and we've been working on it. We've spent hundreds of thousands of dollars that are built into our number. Actually, we expense it, and it's really it should be amortized over long term. But we're going to make our technology be up there to be one of the top, and we're making that effort. We're spending the money. So within the near term, next year, 2 years, super strong. Our financial outlook, we continue to make more and more money every single month when board meetings occur. So happy to see our core profitability break $1 million, which gets us a $12-13 million real run rate. We're going to continue to push that. Started this SBA program, which is limited capital risk on our end with a lot of fee income and takes care of the customer for years. I myself am referring, $100 million or more to friends to do SBA lending outside. And now we're going to take control of that for ourselves. Our NIM has remained strong. It's going to continue to remain strong. Our long-term profitability, I mean, really, these are low targets of a 1% return on average assets and 9.5% return on average equity. I did the math for last year. If we didn't have capital come in the last week of the year, we were close to 16% return on average equity. Put that against any other bank, and I feel like we're doing great. This is our investment strategy, our investment opportunity. Our loan growth compared to the peers, we're killing them. Our per share growth rates also continue to get strong. We're priced well below as far as price versus tangible book versus everybody else, and our earnings per share on this slide is actually lower than really we expected. We want to come in ahead of it, and we expect to come in ahead of it. And again, our deposit growth is beating everybody by a long shot. That being said, we'll take questions. And we'll answer as they come up. So let's see what we got here. Why do you trade at such a discount to tangible book, and how do you turn around perception? That is a great question. I think honestly, I did a bad job. I worked on, like I said earlier, I worked on fundamental making money, and I failed with managing the stock. We haven't done a public offering ever. And we have no coverage because of that. The coverage kind of comes along with a public offering, and we haven't done non-deal roadshows, which now we're starting to do. Today's really the first time doing a presentation to the public. I'm hoping that we start doing these more frequently. I hired Seth Dennison, who's with us today, as a chief investor relations guy. That's going to work on doing this because there's a lot of clerical work that goes into this stuff. Me sitting in front of you talking for the last 24 minutes is not just 24 minutes of me going, and I mean, I could do this. I live and breathe our business, and I could do improv all day long and talk about the bank. But the reality is all the effort that has to go into this to kind of make it happen is a lot of work. And now we have somebody that's going to take care of that. And so God willing, we will do better than what we've been doing. It's on our radar screen, and we're working towards it. The next question, what is the composition of your depositors, and what are the drivers of your growth of deposits? That's a good question. We don't particularly break it down, but from bigger deposits to lower deposits. But I can tell you that we have top 10 depositors in our bank are probably $100-something million, and then a whole group of depositors for a certain business that we do is probably another $100 million. And then outside of that, you're talking about we are mainly lending to. I mean, our depositors are mainly people that borrow money from us. And then we have groups of populations that we've become entrenched in their neighborhoods here in South Florida, between North Miami Beach and Hollywood, Florida, and Boca, where I live, Deerfield, where the branch is. And outside of that, we've done a good job with marketing, to the Israelis, because a lot of Israelis that are in the market, that are in real estate down here, and opening up accounts for them. So That's really our deposit base. Very, very strong. Can you provide any color on your commercial real estate loan portfolio? That's another interesting question. I mean, I think we do break it down into sub concentrations of where it's at. Um, um, I could give you Elliot to give you more on that, but maybe I.
No, that's fine. I mean, in terms of the CRE portfolio, one of the concerns that there's a lot out there today is office space. And one thing that I can tell you in our bank, our CRE portfolio has way less than 1% invested in office space. So we weren't going to suffer the volatility that other banks might suffer.
Beautiful. Next question: any dividends or buybacks in the future? So, if the shareholders really wanted dividends, we would look at it. I've taken the approach, and again, I'm just a chairman. I don't even vote at meetings. I frame conversation, and we come up with good outcomes as a group. But our business has been to grow capital, and grow capital raises our lending limits and helps us make more profitability. And so we've stayed away from anything that lowers our capital. In fact, I want to go the other way and actually raise capital by going to the marketplace and doing an actual public offering, and then bringing cash above book value. Right now, we're trading below book value. So that's part of the plan. Are the internal capital raises and exchange offers done? The shares out have grown very materially over the years. Okay, so yes, this is by David. The internal capital raises have been because myself and my partner, we love our bank and we support our bank. And as the bank has grown, I didn't want to tell the bankers that we should be constricted, to doing anything. So anytime that we wanted to continue to grow, we wanted to fund the growth if need be. Again, we hadn't gone to the public yet, so everything we've done has been at a rate higher than book, and probably close to market. And what we expect to happen, we just got shareholder approval to be able to convert everything, which would be great for our stock, because then the market cap would show our true. We have $71 million of equity. We're showing a market cap today of $20-something million, which is a joke. So what we expect to occur is we're going to convert. I have to apply for change of control, which is all the red tape of the banking world, and hopefully we get that. We should be able to convert most of that, and then when we do a public offering, we'll be able to grow the common stock. And I think then we'd have a normal profile for an investor that may get hung up on some of these things. Then they could get past that, and that's that. Are you looking to expand the bank's physical footprint out of South Florida? Now, that's a very interesting question. If you understand this bank and you kind of understand my role at the bank, a lot of what we do here, and the bank is strong with or without Moshe Gubin being involved. But with Moshe Gubin being involved, my network in the world, feel free to research me if you don't know who I am to begin with. My network is super strong in New York. My network is really, really strong in Illinois. And it really would make sense at some point for us to kind of merge or buy banks, or just open up branches in Illinois and in New York at some point. Right now we're just focusing on doing what we're doing and keep doing it better and better, and bringing the profitability. And then I got to bring in the investors. We have a good plan. I believe if you look 5 years down the road, I believe we'll probably have a branch open in other states. And I think this is the last question because I'm running out of time. Where do you see the bank industry going in the longest answer question is the last one. Where do you see the bank industry going in 2023, and how is Optimum different? Same as the industry as a whole. Okay, well, the world needs banking, obviously, and people they want the relationship. Okay, now we understand millennials, they don't want to talk to anybody, they want to do everything technologically, and so we understand, and that's why we're pushing on the technology side. I don't think I ever compete with JP Morgan, but where we do compete is when a guy needs to borrow money and he wants to buy something, he needs an interaction with a human being, and we're willing to take that person and coddle them and take care of them as best we could. That same person becomes a depositor, and everybody they know, when they have that good interaction, they go and they tell everybody, and that grows our deposit base. So I think it's a necessary business, as we all know. And with that, I will stop here and wish everybody a nice day, and thank everybody for joining us. And hopefully hopefully I presented well enough to get anybody that's not an investor to become an investor. Thank you.